July, right at the beginning of July, something interesting happened. Bond yields were trending up, but right here in July, they erupted. This is what you call going parabolic. They shot up. Immediately, the stock market rally started to crumble. Immediately, dollars started to go up much, much higher. So, of course, we're all saying to make this reverse, somehow we've got to get these yields to come down. But can that really happen? I want to bring in Traderade Co-Founder Ayesha Tariq. And Ayesha, July 1st, I mean, what happened around that time that's turned the entire investing world on its head?
Hey, Charles, thank you for having me back. So I don't know, I guess it was, the weak summer months and, some of the rally in the S&P started to fizzle. But at the same time, I think the biggest thing that we saw was crude oil going up. So as Saudi and Russia started, talking about cuts and extending their cuts, that's basically when we started to see pressure on crude oil. And subsequently, we saw the pressure on yields go up. So, and not just U.S. yields, but even global bond yields, right?
Right. I was just talking to Liz Ann about some of the how complicated these things are, right? On one hand, in stock investors particularly, we want the economy, you're almost rooting for the economy to slow down so that the Fed is off the table. But if the economy slows down too much, earnings estimates are going to take a hit. And I want to share that with everyone because just as as the market started to turn up, as earnings estimates started to turn up, so did the stock market. We got a pretty there. Again, going back to that October low, we started to feel better about earnings. What's your case on earnings? What do you see? Are we too optimistic right now?
So I do think we are a little bit optimistic here. So for the S&P, we're looking at flat earnings growth year on year. And for the NASDAQ, we're looking at something around 12%, which I think is pretty high. And there are a couple of factors that we're looking at which would influence Q3 earnings. And so if I can run through them very quickly, the first thing obviously is inflation coming down. With that, we will see pressure on revenues. Energy costs, I don't believe will play such a big part here, but the US dollar will. So just as Liz Ann Saunders said a little while ago, with the dollar going up, I think we're going to see as well. And then on the cost side, I think what we have is these wages, some of these wages going up, the strikes, upward negotiations in pay packages and so on and so forth. But most of all, I think we're going to see demand come down. So again, we're going to see the top line hit. So earnings might be okay. I mean, I still think it's optimistic, but they might be okay. But I think it's the top line that we have to worry about here.
Oh, okay. And listen, we don't pay enough attention, I don't think, to the top line, particularly organic growth. I'm just going to share with the audience. We don't have time to go through them individually. On your buy list, Rockwell Automation, Accenture, Blue Owl Capital. Owl is a symbol. I'd never heard of it before in Shopify. Pretty eclectic list. Come back later. We'll pick up on this and talk about it. Ayesha, thank you very much.